Welcome back to Research and Design Finance. My name is Ryan, and today we're going to be going over Fundrise 2023 Q1 results, as well as talking about Fundrise Pro, which was a feature just introduced several weeks ago. So if you look at my screen, you'll actually see the current account value I have here today. I'm actually going to move over into net returns. So for Q1, I'm looking at $129.03, and we have partial Q2. This is being filmed on April 4th, but I have partial Q2 earnings of $15.21, but I have $129.03 from Q1. If I go back a little bit, you'll actually see Q4 results were pretty abysmal, and that was from appreciation loss from some of the things that were in the flagship fund, which I'll go into in a minute. As I move over in here, if I go into full breakdown, you can actually see, if I look again, some of the same info, but if I break it down by year, you can see that I really got decimated from a appreciation perspective back in 2022. I did start this fund back in the fall of 2021. So everyone should know that thing's been running for about 18 months or so. And in that time, I actually have made a profit. So interestingly enough, it actually has net return to me $191.99, given the macro environment that we're in today. You see I've got, it's broken down by three different asset classes. So we've got growth real estate, income, and then this growth tech, which I did mention in another video that I'm gonna link up here, around some more venture capital that Fundrise is getting into. So for those of you who don't know, Fundrise is actually moving some of their capital into venture capital away from real estate as a great way to diversify and take advantage from things like tech, data center, artificial intelligence, robotics, gene therapy. Those are things that I expect to see in the growth tech. And when I move in here and actually click into it, you'll see there's only one company in here, Vanta, but that's actually in the growth tech. Now, when I move back in here, if I go to an annual performance, I can actually break this down again. I can see what I've done year to date. So Q1, I came out at almost 1%. Obviously, we're in Q2. We just started, so it's partial. But year to date, I'm up almost 1%. You can see the development. Obviously, that makes sense. From the development side, that's where things started to go down. If I look in here, you'll see mostly the appreciation is what killed it. So we estimated value here, $49. Cost of shares owned, $51.29. And most of this, if I move in here, you'll see this is based all the way, from Texas to Florida to Georgia to Alabama. And again, it's in the ramping up stage. So again, not a big surprise there. Not a big surprise as to why that's taking so long. Something to keep an eye on though, when I move into the actual fund details and see what that looks like, you'll notice that some of the fund's details that are in there are actually things that have been very transitory in 2023. So a lot of these are properties, like I said, these are in Texas, Los Angeles, Alexandria, actually some are in Maryland as well, but you've got a big chunk here that is in multifamily and in creative office. So office and industrial has just been hammered over the last 3 years with COVID. So again, not a big surprise, and then you can actually model out and see what that would look like over a $10,000 investment. Looked great up until summer of 2022. We took a hit there, and then we took another hit there. Why? This is probably another reason why I wouldn't advise anyone to invest all their money into one particular fund, even if the dividends look good. Dividends on this have looked great over the last, let's call it 18 months. But as we know, things can quickly turn south, especially on the commercial office real estate portfolio. As I move back here and I go back to the overview, one of the things in Fundrise Pro is they're actually giving you a subscription to the Wall Street Journal, which I really like. I love the fact that they're including this in here. So when I click in here, I'm not going to do it, but it'll give you an option to scroll through different articles. And then of course you have your feed as well. So I'm going to move over into the investment portion here. I went into more, and I moved down into browse investments. One of the great things about Pro is now you're able to actually customize and build a portfolio to the exact specs that you want. So before it was, hey, give us $10,000, give us $1,000, give us $500, whatever that is, we'll allocate it for you, and maybe that was great. I think for most people, that's fine. I'm probably one of those people, again, where I'm getting ready to build out a customized portfolio using some backdating, looking at more bigger pieces of data and drilling in and seeing what that's like. But in this case, you're able to go through and see all the different funds that are either open, closed, inception date, and available. So in this case, if you really wanted to say, hey, I just want to invest in the East Coast E-REIT, and you only, hey, you wanted to put $5,000 in there, you can go in here and you could do that. So I hit invest, and you can go in here and make an investment. I'm obviously not going to do it, but you could, and then, it could be any amount that you want it to be. So, it's important to know that Fundrise is getting better at allowing more flexibility in their portfolio by allowing users to go in and create things on their own, giving you more flexibility. And this I should stress here, I believe it's $10,000 in the portfolio. Once you have that, the Fundrise Pro kicks in automatically at no additional charge. That's a big thing. But I believe it's below $10,000. There is a fee for this. I could be wrong. I'm actually going to link my referral down in the description. So keep an eye out for that. And I'll obviously put a link for Fundrise Pro down there as well. So when I go back, there's ways to go in and drill into some of the data. So if you go into portfolio, and again, we already went through this, but we have the growth, we have the income, and then we have tech. So we really have two real estate options, and we have a venture capital option. But down here, I really like this. I can actually start drilling into some of the data from around the country to understand, hey, how do home prices correlate with commercial office real estate, coordinate with rent, coordinate with density of population. And it's really interesting to see that Fundrise is using a third party to do this, Basis, which is a data warehouse piece of software. And I can go down here and look at different states. So if I start in Arizona, I can actually see that the national median for rent is $2,074. The national median for rent in Tucson is the same. The metro, though, it's much higher in Phoenix than it is Tucson. That makes total sense. And then the Fundrise metro average, area average, looks at that and says, hey, between the two, what does that look like? If I go back over here, if we check out Florida, Florida's an area that has just been a huge gainer of jobs, of population, especially during the lockdowns as people fled some of those more COVID hammered and restrictive policies like California, New York, Illinois, and moved to places like Arizona, Texas, Tennessee, Florida, Carolinas, Georgia. I would expect rent to go up and continue to go up. So if I look down here and go to a place like Orlando, if I move back in time to May of 2020, you'll actually see the metro area rent was $1,225. If you go now, it's went all the way up to $1,521 in the span of, when did that start? May 2020, and this is taking us to December. So you're talking 2.5 years, a increase of about 15%. Tampa's even worse. Tampa actually, I think Tampa at one point behind Miami had some of the highest rent in Florida. Don't quote me on that, I could be wrong. But Tampa actually started fairly modest, and you'll see, back in May of 2020, 1537, and it has just skyrocketed. So you're talking about a 35 to 40% increase in Tampa rent over a 2.5 year period. I mean, just mind blowing. And for those that are already going to comment, yes, I know I'm not wearing my button down today. I decided to go a little more casual. So for those of you that like the more casual look, please let me know in the comments. All right, I'm going to move into another state. Let's look at Texas. Texas has also been a great benefactor of all of the growth, not only during COVID, but also from the constant people moving from, like I said, California, New York, Illinois, some of those colder, more COVID lockdown states. Austin's probably has some of the highest rent in the country over the past few years. If I go back here and look, the metro average back in May of 2020 was $1,753, and you'll see they actually crisscrossed around, December 2021, where the rent in Austin actually increased above the national median, and it's just continued to climb. So we're sitting as of December 2022 at $2,144 a month, and 2.5 years ago it was $1,753. So you're looking about a 15% increase, and I expect that to continue to go up at least until the end of this year. And if I check Dallas, not as bad as Austin. I think some of these Fort Worth, that's still lower. Houston, San Antonio, but I mean, San Antonio is actually a kind of an outlier. I know several people that have moved to San Antonio had great things to say about it, and their rent is still below the national median. So Austin's really just taken off. I really like this though, because I can go in, look at all the different states, look at, how the data is playing out. Maybe I only want to invest in real estate that sits in the Carolinas or Oklahoma or Nevada, and I want to stay away from places like Texas or Florida because I think they're overbought or they're oversold, or I feel like, hey, maybe the Austin real estate market is gonna pop, and rents are gonna actually drop because we've got more inventory, and we have less people moving there. Same thing with Florida. Maybe Tampa, it's time for Tampa prices to go back down like they were back in the 2014, 2015 era, and I don't want to continue to buy there. I don't know. I mean, it really just depends on, your time horizon, as I said before. Fees, time horizon, risk analysis, all those things play into it. When I actually go back though, when I go back to the overview page, I'm gonna go back into some of my allocations here, and I'm gonna show you what my portfolio looks like. So I've got 72.5 in growth and the other 25.5 in income real estate. So some of that provides me dividends, some of that provides me the growth. My portfolio is set to do a good balance of growth plus dividends. So I'm getting that quarterly payment, but I'm also getting that growth. Fundrise at a certain level gives you the ability to balance it, or you can go heavy on dividends, or you can go heavy on growth. So heavy growth would be light dividends or no dividends, where heavy dividend would be all dividends, and you're not getting that long trajectory of growth. When I move down here, I can actually see a better allocation. So if I look at fixed income, or I could see value add, opportunistic, and that's a smaller portion of my portfolio. So allow me to wrap this up. I've been very happy, I'll bet a bad Q4 with what Fundrise has been able to do. I really like the fact that you can go in here and look at the data. I think that was a big thing missing from Fundrise. That's number one. Number two, the ability to build out your own portfolio. So when I go back into browse investments, I can create a portfolio here of different real estate funds, depending on what I want to do, whether I want to cash flow, appreciate, depending on where I want it to be. So again, maybe I want to stay out of certain areas. I will note some of these funds are closed. Either they're not taking any more investments, or they've sold out of those and returned capital back and appreciation back to the shareholders. So between the ability to continue to invest in a portfolio that I feel is appropriate and having more data, I think this is a big win for Fundrise. I'm very happy that I had a great Q1. I'm looking forward to seeing what Q2 will be like, especially in the commercial office space, as part of my portfolio does contain commercial office real estate. But let me know down in the comments, are you using Fundrise Pro? Are you looking to use some of the advanced features like the ability to drag into data or drill into data and then create your own portfolio? I'd be interested to know. Comment down below, let me know. And as always, don't forget to design your financial freedom. Take care. Bye-bye.